guys, I'm Shemi and welcome back to another video on the NZDayTrading101 channel. So today I'm just going to talk to you guys a little bit about what type of stocks we should be swing trading and what type of stocks we shouldn't be swing trading and the reasons why. So first of all, I just want to talk about I just want to remind everyone that risk management is everything. So it only takes one loss, one really ugly bad loss to wipe out like months worth of gains, and it's not a very nice feeling. So obviously, if you work hard to make like 2-3 grand or whatever for you guys, and all of a sudden one bad trade just wipes you out, and you're just kind of just starting over again. It's one of those things that really brings down your confidence. So what I'm going to show you in this video today is how to avoid these big losses and making sure that we manage our risk in a way that we can be long-term successful day traders. So day trading and swing trading, being a trader takes a really long time. You can't just get into the market and just start making money and never expect that you're going to have like a bigger loss than usual. A loss will come your way. It will come at some point, and you need to learn how to deal with it and the emotional side. And you also need to know what to do when that happens and how to make sure it doesn't happen. So if you guys can make sure that a huge loss doesn't happen to you, then you guys will be successful in the future. So let's get to it. So I just want to talk to you guys about market capitalization. So for stocks, if you guys are swing trading stocks, so swing trading meaning if you're holding it for like 2 days, 3 days, 4 days, a week or something, make sure that the market cap of your stock is above $1 billion. And I'm going to show you why. So if you guys want to find out a market cap, so basically $1 billion market cap company is something like let's see, something like NZ. So just go to details. So this is the market capitalization. So basically, the market capitalization of a company refers to the total dollar market value of a company's outstanding shares. And for this one here for Air New Zealand, as you can see, it's 1.4 billion. So with companies that have a market cap over $1 billion, it just means that they're real companies. So the companies that are quite grounded strongly, and companies that are probably performing quite well, and companies that can stick around for a long time. So they'll have strong balance sheets, and these are the ones you want to swing trade. And the reason for that is, I'll show you. So something like NZ, has 1.4 billion market cap. Yeah, so something like Pushpay Holdings as well. So if you go to Pushpay Holdings company details, so if you guys have like a whatever broker you guys are with, they should have like a sort of information section where it can show you like your 52-week ranges and your price earnings ratio and stuff. So the market cap is what you want to look for. So the market cap. So here we see Pushpay Holdings. So it has a 1.1 billion market cap. So we know that that's quite a solid company. So for a company to be over $1 billion market cap, it takes a huge amount of effort, and it just means that it's just a solid company. So let's go look at let's go look at the chart for Pushpay Holdings. So as you can see here, so these are the stocks that you want to be swing trading. So there's so like Pushpay Holdings, there's so many patterns here. You had your flat top breakout here, so it formed a range, kind of broke out and just started going higher, and then I had another clean range over here. So these are daily candles, by the way. There you go. So formed a range, and all of a sudden broke out the range and started the trend higher. So great swing trade for people that would have entered over here, put their stop loss here, and kind of made their target up here. Again, the stock kind of formed a range going sideways, a nice tight range. So the tighter the range, the more better a breakout's going to be. So if a stock has been in a range for a long time, it's going to have an even better trend upwards. So let's say a stock has been in a sideways for such a long time, all of a sudden it just broke out of its range. trend after that is going to be a good trend because it's been stuck for so long compared to a company that's, compared to a stock that's been kind of trending sideways for a little bit and going up. So if it's been going sideways for just a little bit, it hasn't had that much time to consolidate. And if it does go up, then it's most likely to come back down again. So you can enter it again, and then it'll start to kind of form its way back up. So yeah, again, these were good trades. So if you were to swing trade stocks, then you want to trade so you want to swing companies like this with over $1 billion market cap. So you can find these really nice patterns here. So these range breakouts, they're powerful. They're really good because you can manage your risk, and the tighter the range, the better. So this one had a range between 4.20 and $4, like about a 20-cent range. And if you just got in here somewhere, put your stop at the bottom of your like a candle that's kind of flicked down here, and you have your confirmation about here, then you would have just gone for it. So as you saw it, another range over here, so you could have entered a trade in here as well. So perfect. But yeah, so obviously like stuff when like coronavirus and stuff happens, you can't really stop the kind of the downtrend here. That stocks fall so fast, and that's the risk with share trading as well. You just never know when the market's just going to turn on you. But there was time to get out. So if you guys sold here, did you guys look into get in another range here or something, then you would have been stopped out here, and then you would have just then you would have just been on the sidelines of watching it go down here. So yeah. All right. So now I'm going to give you guys an example of a company that's hasn't got a huge market capitalization. I'm going to show you why it's quite risky to swing trade these stocks. So the company today is SmartPay Holdings. So as you can see, we had a 23% dip the other day. So if you look at the market capitalization here, it's only 67 million. A 67 million, so far off from a billion, obviously. So anything above a billion is pretty much a solid company to swing trade. Anything below a billion, or I guess between 500 million and a billion is okay, but anything below 100 million or even below like 500 million, it's not a safe swing trade unless it's got solid volume behind it and it's just had like an earnings announcement out or something. Otherwise, you shouldn't be swinging it at all, in my personal opinion. So let's see what happens. So 67 million market cap, and if you go to the chart for that, let's see what happens. SmartPay Holdings. There we go. You guys can already see there's a big dip over here. All right. So here's a good day trade. So earnings announcements came out, and you just saw this huge spike where it just had like an 84% increase. So that's pretty good. So obviously it's quite hard to if it went up on that day quite well, then you could day trade it to the upside and sold it at the top on the same day. So as we saw here, SmartPay looked like it's fallen a range. It's kind of choppy. It's not clean compared to our other chart that we saw. And as you saw, it went there, and all of a sudden, people who would have bought here have just taken a 32% loss. And the reason for this is that unexpected news. You never know when unexpected news can come out, and unexpected news tends to hit like these smaller market cap companies a bit more, just because they're quite volatile. So as you saw here, what happened was so anyone who invested here, the company SmartPay went into a halt. So a trading halt is basically when all trading is halted, it just pauses everything. So everything's just halted until it and the reason for a trading halt is usually there's some sort of market sensitive announcement that's about to come out. It's going to cause a huge a huge swing in share price. Sometimes it can be to the upside, but also to the downside as well. So just in order to make it a more orderly and controlled market, they just halt the shares until further notice. So what happened was there was they were in talks about I think being bought out or something. So yeah, let's go to the news. update on proposed sale NZ business and assets. So basically what happened was the proposed sale of the NZ business and assets wasn't happening anymore. And as we saw, when the stock came out, the trading halt, we're down about 30%. So quite painful for the people that would have been trying to swing trade this to the upside. And that's the reason why I don't like to swing trade these type of companies much. These lower market caps. Like it's okay. Like if it's you just got to choose. Like this is a risk. This is a huge risk. Like stuff like that happen, that can wipe you out. So the only way to avoid that is to avoid swing trading in companies like this. So it's good to day trade them. I mean, and also the only time a good swing trade will happen is if again if there's some sort of good news that drove it to the upside. So something like this. So something if you're going to trade these sort of stocks, something like this, and then all of a sudden you see some good news that follows it, and then you can kind of trade it to you can kind of swing it to the upside. So you get in about here, and then just kind of ride the trend up until it kind of just breaks and you just sell it off here. So there you go. So again, guys, just to recap a little bit, it's important that when we swing trade, that we should try to swing trade companies that have over $1 billion market cap. It just saves you from these big sort of losses because this sort of stuff can happen to bigger market cap companies, but it doesn't tend to happen as much compared to low cap companies. So these sort of surprises are not good. Um, so yeah. So if you guys have any questions at all, please leave it in the comment field below. Also smash that like button and also subscribe to my channel and turn on alerts for my next videos. Thank you for watching and we'll see you guys in the next video.